webinar. Once again, good morning to everyone and thank you for joining us. My name is Tapiwa Bepe and I am from the Zimbabwe Stock Exchange. So today we are going to be talking about the basics of investing on the ZSE, also as we celebrate the Global Money Week that is celebrated annually from the 22nd to the 28th of March. So allow me to just maybe do some housekeeping rules for all our guests. If you can just kindly mute your mic as the presenter is speaking, and in the event that you have any questions during the presentation, you can use the chat box, and then we'll also have a Q&A at the end of the session. Our presenter for today is Kudzanai Sharara. I'm sure most of you know him, but allow me to just do a brief introduction for Kudzi. So Kudzi currently works as an economic and capital markets analyst at Business Weekly. And before he joined Business Weekly, he headed the research department at Linton Edwards Stockbrokers as an equity market analyst. That was from January 2010 to August 2017. Kudzanai holds qualifications in financial management from UNISA, investment and portfolio management from the University of Zimbabwe, accounting from the Institute of Administration and Commerce, as well as risk management and journalism. Outside of his professional duties, Kudzi's focus is on educating the ordinary person who wants to participate on the stock market, the techniques needed to do safely and responsibly. This is done under the banner Stock Market for Dummies, as well as Money and Markets podcast. So welcome, Kudzi, and thank you very much for agreeing to be the presenter for this webinar that we are hosting. I will give you the floor right now, so you can just go ahead with your presentation as people are still coming in. Over to you, Kudzi.
Thank you, Tapiwa. Thank you, everyone, for taking your time to be with us this morning to talk about things that are important to us. It's the Global Money Week, which is something that has been recognized across the world. And we thought, in partnership with the ZSE, we thought this is also a good platform to also talk about issues of investment. You know, where there is money, which is the Global Money Week, investments also is a key factor there, because investment allows you to not only manage your money but also to grow your money. So it's very important that we also have this conversation, which help us to make informed decisions for now as well as for our future. I'm trying to share as I speak, I'm trying to share my presentation here with yourselves. So Tapia, you let me know once you have seen it, once it's appearing on your screens. Can you see it now?
Not yet.
Not yet. Okay. Okay. It will be up very soon. Okay. It's asking me whether I want to share, and I'm saying yes, but it's not giving me the blue link to then share. Let me start again. Tapia, maybe you can get ready your side just in case. Okay, I think it's now allowing me to share.
Okay.
Can you see it now?
Yes, now we can see it. If you can just maybe just zoom a bit.
Okay. Zooming. On my side, it's showing me that I'm sharing.
Yes, now we can see it.
Now you can see it.
Yes.
Okay, that's good. Okay, so welcome once again, everyone who has joined us this morning to talk about issues of investing. And my mandate today, as you can see from the front page of our screen, is the basics of investing on the Zimbabwe Stock Exchange. We just want, even for the layman, even for someone who has just heard about investing on the Zimbabwe Stock Exchange, by the end of the day, our hope is that you'll be able to you'll have understood what it takes to invest on the Zimbabwe Stock Exchange, why you should invest on the Zimbabwe Stock Exchange, as well as also prompt you to take action in terms of investing. I know we have had so many of these webinars, and then sometimes people, they listen, they digest it, but at the end of the day, they don't invest. And I can say, whilst the stock market has got its own risks, things like market risk, those who are following would know that even at the moment, the market has been on the downside. But I'll tell you that the biggest risk is not investing at all. That's the biggest risk. The biggest risk is to keep your money elsewhere and not being able to actually invest it on a stock market or any other financial instrument. Mind you, it's not only the stock market that you can invest in. There are other financial instruments that you can invest in. But for today, we want to stick to investing on the Zimbabwe Stock Exchange. So before I tell you the basics of investing on the Zimbabwe Stock Exchange, I think it's very important that we talk about to do with what is investing in the first place. When we talk of investing, what is it that we are talking about?
Sorry,
and as you can see from my
is this being recorded?
Yes,
Yes,
it's being recorded. Mm. And but that doesn't mean you have to log off and it's for I think you can then digest later or review the presentation, because it's important for you to be able to ask questions as well. That's why we do these presentations. Otherwise, we'll just record videos and post them. But it's important that we also be able to ask questions at the end of the presentation. So as you can see from my screen there, what is investing? I've put that picture there. I'm sure most of you who are familiar with the Bible will know about the story of the parable of 10 talents, where a king went away and left 10 talents with his servants. One of them got about 5, another one got about 4, and another one got 1. 2 of them, they invested those talents, and 1 just buried it in the soil. I think most of us, because of various reasons, we are doing the same. We make our money elsewhere, and then we bury some of it under the pillow or under the mattress, and we keep it there for safekeeping. But as you can see from those 2 who invested their money, they were able to grow it, and at the end of the day, they were also rewarded for their efforts. So that's what is investing. To move on, investing can mean different things to different people. I always talk to my wife, and she says, "Look, I already have my business, my tuck shop. It's an investment because at the end of the day, it brings a profit. So it's an investment in its own right." However, today we want to focus on investing as in putting money into a financial product. In this case, we are talking about shares with the expectations of achieving profit. And when we're talking about investing on the stock market, those profits will come in form of capital appreciation, as well as in form of dividends that the companies that we invest in pay us. At any given time, we all have money sitting in the bank for future use. Maybe it's a savings for the house or a wedding or retirement. But for now, it's just sitting in the bank. And for those who know what's happening in our financial services sector, banks in particular, you would know that when you put your money in the bank, it's not earning you any interest. In fact, if you put $100 today and you want to take it at the end of the year to buy whatever you would have planned to buy, you realize that probably it's no longer $100 as you put it into the bank. So that's one of the reasons why what we are talking about investing, to say you are putting money into a financial instrument. In this case, you are putting money into shares by buying shares, which at the end of the day you are expecting to earn capital appreciation or capital gains, or you expect the particular company to pay you a dividend. I know there are about 4 companies that have already released their results, and 3 of them, they've actually paid dividends. And I know one of them released the results yesterday, and they paid a dividend. So that is another form of return that you get from investing. And continuing with what is investing, like I was highlighting earlier on, to say sometimes we put our money in the bank, and in the bank we see that there is what we call value erosion. What is value erosion? This is whereby what you can buy today with $100, a year later or 5 months down the line, $100 can no longer buy the same things. Whether it's 100 Zimbabwean dollars or 100 US dollars, it can be eroded by inflation. So you need to make sure that your money is not eroded, as well as it is also earning you something. As you can see from that picture, somebody holding a $1 US dollar there, and you can see that it's actually losing some of its features, depicting the loss of value, whether it's in US. We know what's happening in Zimbabwe at the moment, where prices are also going up in US dollar terms. So your money, whether it's in US dollars or it's in local Zimbabwean dollars, there is a risk that it can lose value if you keep it as it is. So that is another reason why sometimes we talk about investing. So why invest in the first place? We said earlier on that we want to preserve against erosion. So we want to preserve value. To say, if I put $100 today, by the end of the year, I will be able to purchase whatever I want with that $100. And but because of inflation, sometimes you see that by the time we get to December, whatever is costing $100 today, in December, it could be costing $110. So there is that erosion of value. The other reason why we invest is for potential to build wealth. There is what they call the power of compounding. I know a lot of, especially retail investors, when they invest in the stock market, when their shares appreciate in value, most of us, or when, let's use an example of when we are paid dividends. Most of us, when we are paid dividends, we take the money and use it elsewhere. But if you want to benefit from the power of compounding, this is when you are paid a dividends by a company that is listed. You reinvest those dividends. So instead of only having 100 US dollars in the stock market earning you some capital appreciation, you now have $100 plus the dividends that you were paid. So you now have, for example, you now have $110. And if $110 go up by 50%, it's more than just having $100 going up by 50%. So that's the power of compounding, which you can benefit by investing on the stock market. The stock market also allows you to generate additional income streams. Earlier on, I talked about the issue that my wife says that she has got a tuck shop, so that's her investment. But she has got only one source of income, which is the tuck shop. However, if she takes some of her profits and invests them on the stock market, it means that she gains, or she has got some income from her tuck shop, as well as income from her investments on the Zimbabwe Stock Exchange. So it gives you additional income streams. And as we know, in businesses, there are cycles. At some point, you see that the tuck shop is performing better than the stock market. And then in some cases, you see that the stock market is performing way better than the tuck shop. So that's additional income streams that you can get, as well as some form of diversification. And then another reason why invest is that you get what we call financial stability. We are in the Global Money Week, and I think one of the major theme that they're running with is that of financial stability. And the financial stability is not only for the now, but also in future. There will come a time when you are no longer able to work, even going into your tuck shop to go and, for example, to restock you won't be able to do it because of old age, and you just want to relax at your house or at your rural area or at your farm. You just want to relax without worrying where you'll get money. So if you invest now on the Zimbabwe Stock Exchange with a 10-year horizon or whatever a time frame that that is good for you, you'll be able to generate income and accumulate wealth that will save you after retirement. And then another reason why we invest is that there are other investment opportunities that allows diversification. When you invest on the Zimbabwe Stock Exchange, you can diversify your investments across several income sectors. Because, for example, if you want to, it allows you to invest into the retail sector. It allows you to invest in the banking sector. It allows you to invest into the agricultural sector. So you are diversifying. It also allows you to invest in companies that have got operations outside Zimbabwe. For example, we've got companies like Padenga. They've got operations outside of Zimbabwe. So if things are tough here in Zimbabwe, your income streams are diversified because the company that you have invested in also has earnings outside of Zimbabwe. And if those countries are doing well than Zimbabwe, then you stand to benefit. So the stock market allows that diversification to be invested in so many different sectors. Some of the sectors that you don't even have experience in investing in, you'll be able to do that through investing on the Zimbabwe Stock Exchange. Another reason, probably the last why we should invest is that of the return that you get from your invested assets, and we say that you can get that return in terms of capital appreciation or in terms of dividends that you are paid by the company. Now, I know a lot of people we jump into these investments once we hear that. For example, once I tell you that at the moment the Zimbabwe Stock Exchange is the best performing stock exchange in Africa, including the ZSE, including the Kenya Nairobi Stock Exchange in Kenya, the Nigerian Stock Exchange, all stock exchanges in Africa. The Zimbabwe Stock Exchange is currently the best performing stock market with more than 50% gain, even in US dollar terms. So once people hear that, they rush into investing. But I think it's good as we start to also highlight that the stock market is not without risk. There are obviously risks that are involved. Risk is an investment chance of producing lower than expected return or even losing value. For example, you might go into the stock market with the objective of getting a return of 50%. If your return comes back as 10%, 20%, which is less than what you expected, that is a risk that is inherent in the market as well. Also, as I highlighted, your money can actually lose value at some point. For example, the market is coming off at the moment. Some people bought when it peaked, when the market capitalization was at $560 billion. Now the market capitalization is below $500 billion. So you can see that there's some value. There is a risk that of losing value, and depending on your time horizon, if you had invested saying that by next week I should be able to recoup my returns, I should be able to disinvest from the Zimbabwe Stock Exchange. At the moment, you are in that risk moment where you are not able to then sell your shares at a profit or sell your shares and retain the value that you invested. So those are some of the risks that are involved in the market. So you should get into the market with the full knowledge that your investment is not 100% given that they will give you your return at the time that you expect. So that is a risk that we should always highlight. So some people will also ask, how else do I lose money on the Zimbabwe Stock Exchange? You lose money, or you only lose money on the Zimbabwe Stock Exchange by selling at a price that is lower than the one you bought at. If you buy at $1 and you sell at 50 cents, that's when you lose money. But if share prices move from $1 to 50 cents, it does not automatically mean that you have lost value. You only lose value when you then act on that position and decide to sell, that's when you lose money on the stock market. So sometimes you have to hang in there, and the market will obviously, in most cases anyway, the market will recover and appreciate. We have been above 500 below, and we came back below 500 now, and then we went back to 500 and beat the records that were there. But again, we are back below $500, which to some means it's an opportunity to buy. But that is a discussion for another day, to say when is the opportunity to buy, when should I buy, when should I sell. But for today, we are just focusing on the basics of investing on the Zimbabwe Stock Exchange. Another way of losing money on the Zimbabwe Stock Exchange, which we highlighted earlier on, is when your gains, your 10% gain, for example, is now lower than inflation. So inflation is rampant, and probably let's say year-on-year inflation is at 500%, and your gains are at 300%. It means that as much as you have gained, but in terms of actual value, you have lost value, because inflation was racing ahead of your capital gains. So that is another way you can actually end up losing money on a stock market. We can also talk about the issues of currency depreciation, where, for example, when you went into the market, your 1,000 Zimbabwean dollars could buy you 10 US dollars. And then after a year, your shares have gained, maybe they're now at $1,200, but that $1,200 can no longer buy you the $10 that you could buy when you had $1,000. So that is another way you can lose money on the stock market. And then obviously, when the company becomes insolvent, yes, some listed companies, they end up becoming insolvent. Some of them, they end up being closing down. So that is another way, possibility of losing money on the stock market. So before you go into the stock market, you also need to then assess your goals. Even if you are a short-term investor or you are a long-term investor, it's always good that you assess your goals. And also, do not invest your emergence funds, as we highlighted earlier on, to say sometimes you get into the market today, the market is in a bullish, is on a rally, and you get into the market. But the day you get into the market is also the day some economic news that is probably on the negative side is announced, and the share prices come off. And you have invested your emergence money. For example, maybe you have put in your school fees, which you want to pay next month, and you have invested it into the stock market. Maybe you have taken some money for your medical, for your medication, and you have invested in the stock market for the short term. And then you hear that the news that maybe some negative economic news, and then the market starts coming off. So you need not, it's encouraged not to invest your emergence funds. And then long term is good to invest in the long term, but always do periodical reviews of your portfolios. Invest in the long term, but always do periodical reviews of your portfolios, because sometimes you can hear that this company is performing well. You do your analysis, you ask other analysts to give you their opinions, and they all say, no, this is good, everything is fine. And then tomorrow, probably in that company, or a few months down the line, maybe there are new policies that have been introduced that have got a material impact on your company, and you do not think your company still has the same future it had. We have had companies that were performing, making money, but because of new policies that are introduced, you will realize that the company is no longer in a position to make money as much as you thought. So you need those periodical reviews to say, these companies that I've invested in, are they still in a position, in the same position or better position than when I bought them? So that's in terms of assessing your goals. As we always highlight, stocks can be volatile. So be mentally prepared to ride out the ups and downs. You must know that the stock market has got ups and downs, corrections and bears, rallies and bullish runs, or the bulls. They are associated with the stock market. So you need to go into the stock market with the full understanding that there is that volatility that is there. So you need to just do your homework. So what are the investment options that we have on the Zimbabwe Stock Exchange? What are the investment options we have on the Zimbabwe Stock Exchange? You can buy individual stocks where you can your returns will be in the form of capital gains as well as dividends. And I talked about the power of compounding. As you can see from those glasses, you can see there's growth from that. And then we now have a new instrument that was introduced by the Zimbabwe Stock Exchange in partnership, or it is sponsored by Old Mutual, which is the exchange traded funds. Exchange traded funds, this is a financial instrument where the sponsor, for example, in this case, Old Mutual, they create an instrument where they invest in a diversified portfolio. In this case, they just invested in they invest in 10 of the biggest capitalized companies on the Zimbabwe Stock Exchange. So your heavyweights, that's where they invested. In the top 10 by market capitalization, that's where they have invested, which means that I know, especially for a lot of retail investors, if you have got your $500, which is the minimum that we say you can invest in the stock market, if you have got your $500 or your $1,000, if you try to buy companies like Delta, for example, or your Inscos or those big cap counters, you might realize that you won't be able to buy the minimum of 100 shares. Probably your money is only enough to buy 20 shares of Delta, for example. So you won't be able to invest in those companies. But with an ETF now, with an exchange traded fund, it allows you exposure into Delta. It allows you exposure into all those big cap companies through the exchange traded funds, because the instrument itself is invested in those companies, and when they pay dividends, you also get to benefit from those dividends, either through the sponsors of the ETF paying you the dividends in form of new units, or in form of money, or in form of them buying more companies that are under the structure of the ETF. So that is an exchange traded fund, which is good, especially for those who are starting their investment journey, because it gives you exposure to a wide variety and diversified portfolio. Some of them are in the manufacturing sector, some of them are exporters, some of them are in the financial services sector. So you already have exposure in companies that individually you could not be able to probably purchase them. So that is those are the options that you can get from investing on the Zimbabwe Stock Exchange. I know they are working on other instruments that they will introduce in the near future, as well as in the long term. So how to make money on the ZSE? I think we have talked about it. You buy the basics is that you sell at a higher price than the price that you bought at. That's how you make money. Sell at a higher price than the one that you bought at, as well as when the company pays you dividend. That's how you make money on the Zimbabwe Stock Exchange. Other corporate actions such as mergers, acquisitions, they also increase company value for the company that you are invested in. So that's how you make money on the Zimbabwe Stock Exchange. What are the obtaining returns at the moment? How good is the Zimbabwe Stock Exchange performing at the moment? This can change, but at the moment, for example, we can start from last year. In 2020, the Zimbabwe Stock Exchange was the best performing market in Africa, with a 130% return in US dollar terms, as well as a 900% return in Zimbabwean dollar terms. So we are talking about its market capitalization. It went up by 130% in US dollar terms and about 912% in Zimbabwe dollar terms. At the moment, where is it? When I was preparing this presentation, it was roughly about 60% in US dollar terms, but I understand it is now roughly about 53, 54% in US dollar terms. So this is the 3 months between January and now. In 3 months, you'd have gained a 60% return if you are on average, if you're invested on the stock market. I'm saying on average because there are other companies that are in the negative territory as we speak, which means that if you had invested in those companies, your investment is either in the negative or it's at break even. You haven't made any gains at the moment. Then there are other companies that have done exceptionally well, For example, there is a company called Unifreight, which is, I think, the top riser at the moment, which is up by 5,000%. I'm just mentioning these companies for examples, just for the purpose of giving examples. I'm not recommending any company for purchase, but I'm just highlighting the obtaining returns on the stock market at the moment, where some counters have already given a year-to-date return of more than 5,000% in Zimbabwe dollar terms, and some they are actually in the negative territory. I think the biggest loser at the moment is down by about 31%. So if you had bought on the 1st of January, you will be in the negative territory as we speak. But those are normal activities on a market. So in terms of inflation, back to 2020, year-on-year inflation was at 348%. Year-on-year inflation was at 348%. But the return, the market capitalization return on the Zimbabwe Stock Exchange was 912%, which shows you that the investments on the Zimbabwe Stock Exchange beat inflation. Whoever invested on the Zimbabwe Stock Exchange, on average, their returns managed to beat inflation or were not eroded by inflation. That's why we ended up with a 130% return in US dollar terms, because we had factored in the currency depreciation that we witnessed in 2020, where the Zimbabwean dollar devalued by about 388%. So that 912% gain in equities, you factor in the 388% deep currency devaluation, that will give you end up having that 130% return in US dollar terms. So those are the obtaining returns on the Zimbabwe Stock Exchange. They change depending on what's happening with the fundamentals, the macro fundamentals in the economy, as well as micro fundamentals, which are company specific in terms of the company that you are invested in, that will determine the sort of return that you can get on the stock market. So returns on the stock market are not guaranteed. I get a lot of questions to say, so if I invest my $100 today, how much will it be in December? How much will it be in June? Unfortunately, on the stock market, it's not guaranteed as such. You just have to do your homework, and hopefully other investors are also seeing the same value that you are seeing in your shares, and as more and more of you are buying that particular share, that's how you get to get a better return than when you bought. And then someone can say, how come the Zimbabwe Stock Exchange is performing better than other African markets? And some would say, but I thought the economy was not doing so well, so how come the Zimbabwe Stock Exchange is performing? So one of the issues why the Zimbabwe Stock Exchange is performing is the issue of money supply in the economy, the amount of money that is in the economy. By November 2020, the money supply grew by about 315%, and which means that there was a lot of money chasing other products as well as shares for those who wanted to invest, for those who wanted to find a home for their money. Some of them, they thought the stock market was the best, and I can tell you that a lot of pension funds and the like, and insurance companies, they also invest quite heavily on the Zimbabwe Stock Exchange. So that's one of the reasons there were more buyers than sellers on the stock market. The issue of inflation, the stock market is also used by some as a hedge against inflation, to protect themselves against inflation. So it was one of the vehicles that people thought they could actually protect themselves against inflation, as well as against currency depreciation. And then also in 2019, we saw monetary changes where we moved away from exclusive use of the US dollar. We're now moving on to the exclusive use of our local currency, and there was a lot of which happened in 2019. Even the Zimbabwe Stock Exchange itself, it was
Sorry, Kudzana, I think you're muted.
Hi, Kudzi. Your mic is now muted.
Okay, can you hear me now?
Yes.
Hello? You can hear me now?
Now we can hear you. Yes.
I'm not sure what happened because I didn't even touch anything on my laptop. But that's fine. So we're talking about how come. Some people would say, how come the Zimbabwe Stock Exchange is performing? Because in their view, they reckon that the Zimbabwean economy is not performing. So how come the Zimbabwe Stock Exchange is performing? And I was just highlighting to say there is the issue of money supply. If the money supply in the economy, or the amount of money in our economy, grew by about 315% by November 2020. So from January to November 2020, money supply grew by 315%. And those who were cash rich, they would look for a home for their money. And one of the few options that we have in Zimbabwe is the Zimbabwe Stock Exchange. So we saw a lot of money going to the Zimbabwe Stock Exchange to look for a home, and that resulted in price appreciation. And we talked about the issue of hedging against inflation. Inflation was very high at 348% at the end of the year. So some people would invest on the stock market to hedge against inflation. And as it seems, there were many people who were also trying to hedge against inflation. And the more buyers we have, the higher the prices on the stock market go up. So that's a macro determinant of share prices there. Currency depreciation also was a factor. People were trying to hedge against currency depreciation because as we started the year, for example, as we started 2020, I think one US dollar to the Zimbabwe dollar was, I think the exchange rate was at around 17% as we started the year. And then in March, when we went into under lockdown, it was around 25. The exchange rate was 25, and then it ended up the year at around 82%. So someone would want to hedge against that currency depreciation, and they end up investing on the Zimbabwe Stock Exchange. So that's another reason why it was performing quite well last year. And then I was talking about the undervaluation of the monetary changes that we saw in 2019, where we moved from trading on the Zimbabwe Stock Exchange. We moved from trading in US dollars to trading in local Zimbabwean dollars. That resulted in some distortions on the market, and those distortions are now what was being corrected in 2020, where counters that were thought to be undervalued were now being re-rated and properly valued, and we saw that resulting in the stock market rallying last year. Limited investment options, also another factor why a lot of people are investing on the Zimbabwe Stock Exchange, and I think that situation is still prevailing in our environment, where there are limited investment options. If you try to go into property, into the property sector, probably don't have enough financial muscle to be able to buy a stand or any other property. So a lot of people cannot afford to go into the property sector. The returns that are there are also on the downside. We know with the lockdowns and the new ways of working, where people are working from home, some companies are reducing space. So a lot of properties are no longer occupied. So when somebody looks at that, they would think the property market is not a good investment area for them. Some will also think of the money market, and they look at the interest rates that are being paid there, and they are not that lucrative. And so they end up coming to the stock market to invest. So that's another reason why the stock market was performing quite well in 2020. And we also think there are still limited options, and we will see a lot of investments coming to the stock market. And then we talked about the unappealing fixed income yields. Yeah, we are talking about your treasury bills, which are giving you at the moment. Last year, they were giving about 16% yield. This year, I think the first one that was issued about a couple of weeks ago is giving a yield of about 19%. And you compare that with inflation, it might not be attractive to you. So you think about investing on the stock market. So the bottom line, people got more than hedging, which means that it was not only, at the end of the day in 2020, it was not only hedging, but it was more than hedging, because you ended up having quite handsome or significant returns on the stock market. Someone will then say, okay, you highlighted that there were negative issues that resulted in people investing on the Zimbabwe Stock Exchange. What if things stabilize? What if the economy starts pumping again and everything is normal, the exchange rate is stable, inflation is very low? So will there still be need for us to be invested in the Zimbabwe Stock Exchange? And the short answer to that is yes. Why do we say so? Because we are looking at companies at the moment. The latest report from the Confederation of Zimbabwe Industries will tell you that companies, on average, companies in Zimbabwe, their capacity utilization is at 47%, which means that they've got a plant which can produce 100 units, but it's only producing 47 units. So we've got so many companies that are listed on the Zimbabwe Stock Exchange and are at a 47% capacity utilization. So if things normalize and the economy starts pumping again, it means that those companies will also have headroom for growth. They will also grow as the economy grows. They will also grow, and their valuations will also grow along with what's happening in the economy. So we've got a very perfect situation at the moment where if things are really bad in the economy, people use the stock market as a hedge. Or if things start improving, people will also look for value from the stock market because the companies that are listed there will also start to perform well. So that's what I think will happen. And then now, after having said that about what is investing and why we need to invest, we now need to go to the issue of, so after you have convinced me that I should be investing on the Zimbabwe Stock Exchange, what do I have to do to start investing on the Zimbabwe Stock Exchange? So you can do so by opening your trading accounts. Traditionally, and it's still happening, but that's the traditional way, you would open your account with a stockbroker. So you open your broker's account, that's account number one. You then open your CSD account, which is also needed. That's in the past, you'd be given certificates, like your physical certificates, a paper that you'll be given to say you have bought your shares. You now have this certificate as show of your investment. It's no longer happening that way. It's now electronic, and there's a CSD certificate of security depository, which is the CSD account, which you need, where after buying your shares, that's where your shares will be stored. It's like a bank statement. If you go to them, to Chengetedzai Depository Corporation, and you ask them to say, I want a statement of my shareholdings, they will give you a statement which is as good as a bank statement to tell you that, okay, these are the shares that are in your portfolio. This is what has been happening in your account. You bought shares, you sold them, you bought again, and so on and so forth. So that's the CSD account which you need to open. You cannot be able to buy shares without that CSD account. You also need a stockbroker for you to be able to buy shares, whether you're doing it the traditional way or the new way, which is the electronic way. You need the stockbroker, you need a CSD account. We'll talk more about the other platforms that you can use for opening an account. So you've got those two. You also need a custodian account. Again, on the custodian account, there are two different ones. There are custodian accounts that are operated by other institutions that are licensed as custodians, who can also take care of your investments. That you can buy and sell your shares through them, giving them instructions and so on and so forth. But there are also what we call broker-controlled accounts, where you open a custodian account with the stockbroker that you would have opened an account with. So you open that broker-controlled account. What do you need to open those accounts? You need an ID, your ID, proof of residence, passport size photos, and a bank account. At the moment, if you buy or sell your shares, they have to be it has to be done through your bank account. And then choosing a stockbroker, a lot of questions that also come from people to say, so how do I choose a stockbroker? How do I know this is the best stockbroker, and so on and so forth? What I can tell you is that all stockbrokers in Zimbabwe, they charge the same amount, 0.92% of your buy or sell order. That's their charge, 0.92%. In terms of choosing, probably you might also want to look at the quality of service that they give you. it's the quality of service that can differentiate them. Some of them, they offer educational tools. Some, they will give you access to their investments. They've got their research departments. Some stockbrokers don't have those research departments. So those are the things probably you want to know from them to say what else besides executing, because the main mandate of stockbrokers is to execute your trades, to execute your instructions. That's the main mandate. But some of them, they go an extra mile to offer educational information as well as investment research. So you need to ask them to say, what else do you offer? Do you offer investment research? Because it helps you in decision making as well. Some of them, they will favor institutional and wealthy investors. Those are their clientele base. And some do not like dealing with small-time investors. All those things you need to be to research on that if you want to choose a stockbroker. I thought I should highlight on that because it's a question that always come to say, so how do I know? How do I choose a stockbroker? And also the other thing about stockbrokers is that all stockbrokers are licensed. Saka kuna munu, there are no stockbrokers that can buy your own shares on your behalf if they are not licensed. They must be licensed by the Zimbabwe Stock Exchange as well as the Securities and Exchange Commission. They must be licensed by those as well. So it's very important to know that hakuna chitsotsi. It's not a Ponzi scheme, and there are no there should be no fraudulent activities from licensed stockbrokers. And because they are listed, they are licensed, there is recourse. You can go to the Zimbabwe Stock Exchange, you can go to the Securities and Exchange Commission if there are any fraudulent activities that are happening. So it's very important to know that. And then there are other trading platforms that we can talk about. There is the C-Trade, which is an application which you can find online, as well as they also have an online portal when you are using your laptop or your computer, and then an application if you are using your phone. And then we have the ZSE Direct, which is run by our host for today, the Zimbabwe Stock Exchange. They also have their own platform which you can use to buy and sell shares. That the ZSE Direct, which is an online portal at the moment. I understand they are still working on coming up with an application which can then make it easier when using the phone. And that's the website there, www.zsedirect.co.zw. You'll be able to actually open your account there. And as you open your account, just make sure that by your side you have got your account opening, a copy of your ID in your phone. If you're using your phone or computer, you must have in the system a copy of your ID, proof of residence, as well as your passport size photo, as well as your bank statement, your banking details by your side. So it's so that you can smoothen the process. They've also have some YouTube videos that can also help you in account opening. So if you have any questions, just go to your YouTube and search for ZSE. You'll be able to see some videos that can also help you to talk about the issues of opening an account on ZSE Direct, how to buy, how to sell, and so on and so forth. There are very useful features that are on ZSE Direct. One of my favorite is what they call the market depth, which tells you what other investors are doing in terms of buying, how many are buying and how many are selling, at what price they are buying and at what price they are selling. It's a very important feature, so that you know that you're not alone in, or at least you are the best in terms of the bid prices and so on and so forth. So if you've got any other questions about ZSE Direct, I'm sure Tapio at the end of the presentation, if there are any questions, then we can address them later. Another question that is always asked is to say, okay, I've opened up my account, I've bought my shares, but they are not appearing on my ZSE Direct or is it C-Trade, whatever platform you are using. The settlement cycle is T+3, which means the day of trading, that's the T, that's the day of trading, and then +3, which is 3 working days. That's when you can then see either your shares that you have bought or the money after selling. That's when you can expect to get your money or your shares to reflect on your statement. That's the settlement cycle there, which is very important to know about in terms of your investments. And then the cost of transaction, how much does it cost you to invest on the Zimbabwe Stock Exchange? How much does it cost you to invest on the Zimbabwe Stock Exchange? If you are buying, you are charged 1.693%. 1.693%. That's the total charge you are charged by when you are on the buying side. And it has got all the charges, including the stockbroker that we talked about earlier on, to say they charge 0.92%. They are also included in that 1.693%. And then on the selling side, when you decide to sell, you are charged 2.43%. 2.443%. And in total, the buying and selling side, both sides, you are charged 4.136%. 4.136%. So it's important to know these charges when you are buying and selling shares, because you find someone your shares will gain by 5%, and then you say, I've made money, my shares have gone up by 5%, so I'm selling. You must not forget that 4.136% of those gains will go to charges. So you must factor that in as you buy and sell your shares, as well as some bank charges. Also factor in your bank charges to say how much are your bank charges, what percentage are they. Let's say they are 1%. So you know that 5.136% of your gains are going to cater for cost of transaction. So a 5% gain is not a gain to you because you have to cater for those charges. So please take note of that and factor that into the cost of transaction, as well as in your gains. So that's the Zimbabwe Stock Exchange. As you can see, that's the trend in terms of where it's heading. At some point, it was on the downside there, but overall, as you can see from that graph, you can see the trend line there is pointing upwards. At the moment, that's how the Zimbabwe Stock Exchange is performing, and I think that also leads us to question time, which I'll hand you over to Tapiwa to lead us in the question and answer session.
Okay, thank you very much, Kuzi, for impacting such knowledge to everyone here present. So what I'll do is I'll go through the chat first, then you can tackle some of the questions there. And then for those that would want to speak, you can raise your hand, and then we will then do it one person at a time to avoid maybe background noise.
That's fine.
Okay, so let me start with some of the other questions that were coming through as you were presenting. Another question was, what are some of the key criteria when analyzing stocks, and what are some of the sources to gain the insights on particular counters?
Okay, so the issue of analyzing stocks, I think it needs days of its own to actually look at some of the key aspects of analyzing stocks. But I'll just be in brief so that we can help you out with that. Like I always say, to others to say that the very basic thing that you need to understand is to understand the business that you are investing in. You need to understand how they make money. And after they have made money, you also need to understand of that money that they are making, how much of that goes to profits. So you're now talking about the issues of profit margins, to say after this particular firm has made $500 million in revenue, how much of that is going into profit? And you compare with other companies. Let's say it's a retail company, a company that operates supermarkets. They've made a revenue of let's say $1 million. How much of that has gone into profit? Let's say 2% is going into profit. You need also to compare with other retailers and to say, okay, of their revenues, how much of that is going into profits? You might see that the others, they get 5%, a margin of 5% profit after tax margin of 5%. But the one that you want to invest in is only making 2%. That should help you in your decision making to say, but these guys, there's something that they are not doing right. Why are others earning 5% and they're only making 2% in profit? So in short, that's some of the things that you need to be on the lookout for. You need to look at their cost structure. You'll find out some companies, in terms of their cost structures, they spend 70% of their revenues to cater for costs. But then in the same industry, you see others are only spending 50%. That should also be an indicator to you to say which one is the best company. And then you asked about the issue of where can you find information. The Zimbabwe Stock Exchange itself on its website, www.zsc.co.zw, they every day, or not necessarily every day, but if you go there every day, there is always new information about what companies are doing, what companies are saying, their results, their cautionary statement, their trading updates. Those are information that you need to be on the lookout for. The companies themselves on their website, newspapers as well, they cover some of these companies, as well as stockbrokers. If you go to the websites of stockbrokers that do research, you'll see research there, and that will help you in decision making and also getting information of what's happening with those companies. Now we are already in the reporting season, and if you go to the website of the Zimbabwe Stock Exchange, all these companies that are releasing their results, they will be uploaded on the Zimbabwe Stock Exchange. Thank you, Tapio.
Okay, thanks for that, Kudzi. The next one, maybe I can take that one because it was asking about, can I invest in USD and be able to take my money out? And then the other one was to kindly advise on the Victoria Falls Stock Exchange. So the Victoria Falls Stock Exchange was launched last year in in October 2020, and it currently trades in US dollar. So yes, you can actually participate as an investor on the Victoria Falls Stock Exchange because it's United States denominated, but for the ZSE now, that is the local currency. So for someone who actually has the foreign currency, you will be able to then participate on the Victoria Falls Stock Exchange. Okay, I think the next question, because you highlighted on that as you were doing your presentation, because they were asking about the online trading platforms for ZSE, and yes, as ZSE, we also have ZSE Direct, which every retail investor can actually participate on. It's quite easy and simple to actually register. I think for more details, we'll be able to share with the participants on how you can register, especially with the links on how you can then do the whole registration process. There's another question that is coming, Kudzi. Why T+3? Can it be instant or take 24 hours?
Yes, thank you for that question. Yeah, I think it's to do with it's an ecosystem. There are banks that are involved. There are transfer secretaries that are involved. So there are several players that are involved in the buying and selling of shares, and there are issues of know your client, KYCs. And also there is need to transfer the shares from the buy. Like when the market closes at 12:30, the brokers will start processing the transactions that would have taken place on that particular day, and then it goes to the CSD, and then the transfer secretaries. All those players, they've got their roles, and then it goes from remember that for example, you are selling your shares, you're actually selling your shares to someone, and then the money will have to exchange hands and things like that. So we have the T+3. It used to be even more than that, but there was an improvement in the last couple of years to T+3. In South Africa, it's also T+3, but I know that in some other countries, they've moved down from T+3. So it's something that I'm sure the ZSE is also looking at to see how it can be improved. But at the moment, it's T+3. Maybe Tapio, I can share in terms of is the ZSE working with regards trying to go below T+3 and overtake South Africa, which is still at T+3.
Hi, Kudzi. Yes, so I think you explained well on the T+3, and these are some of the initiatives that we will then initiate as the ZSE to try to actually minimize the settlement period. But once that is available, we'll then be able to actually update the market. Then moving on, there was a question on if I'm able to change my broker. I'm not sure if the question was if you're on ZSE Direct or if you go physically to a broker, but maybe we'll just tackle both sides. So if you first have a trading account with a broker, you are able to then open another sub account with another broker of your choice. Then they'll be able to do the whole process for you. And then in terms of ZSE Direct, if you are able to change your broker, if you have not yet been allocated a CSD account, you will still be allowed to change your broker within that phase, since you won't have a CSD account. But in the event that you have been allocated a CSD account, what it then means is that the new broker will then create a sub account for you, the one that you then use to trade on ZSE Direct. I'm trying to do as quickly as I can for some of the questions. Then the next one was, can a trust trade on the ZSE? At the moment, a trust is not able to trade on ZSE. This is for individuals, but if you have a trust, you are actually able to go physically to the stockbroker, and then they'll be able to use your trust in trading. But on ZSE Direct, which is the online platform, that functionality is not yet available. Can I give a chance? Sten had raised his hand. I don't know if he's still in the meeting. You wanted to ask a question to Kudzi. You can go ahead and unmute and ask your question, Stan.
Oh, hi. Sorry, I had then put the questions on the chat. I was basically asking about the CSD account, because I already have something going on with C-Trade and I'm already trading, and I have a CSD account for a certain stockbroker, which is the same broker that I chose when I then opened the ZSE Direct account. But my application is still waiting for the CSD number. So that's why I was asking, will it be different from the one I'm using on C-Trade, since the broker is the same?
Okay, thanks for that question, Stan. So let me try to explain it in this way. You said you've got an account on C-Trade. So the model that C-Trade uses is actually a bit different from the model that ZSE uses. With the ZSE, you'll be the sole beneficiary of your CSD account, whereas with C-Trade now, it's a nominee account, so you're not the sole beneficiary. That's why on ZSE Direct with the CSD account, you then be able to view your holdings when you then start trading. So you won't then be able to move your holdings from C-Trade to ZSE Direct when you then get that allocated CSD account. So in short, on ZSE Direct, you'll be the sole.
Thank you.
Hi, Stan. I don't know if Stan is still there.
Yes, I'm still online. Thank you for that. I think I'm answered now.
Okay, that's fine. Thank you for that. Maybe we can just give one or two people to raise their hands if they still have any questions for Kudzi. Yes, Vunganai, you can go ahead and unmute your mic.
Okay, good morning and thank you, everyone.
Good morning.
Good morning.
Yes, okay, thank you. I wanted to ask Kudzanai if he can maybe in brief tell us on how to perform maybe an analysis on a company, say, okay, Zimbabwe or any other, so that we can do them and maybe make a decision on how to invest.
Okay, thank you for that question. I think it's similar to one I addressed earlier on, to say the issue of analyzing markets, it might need a day on its own. But I was just highlighting some of the basics of investing, of analyzing companies, where I was highlighting to say you need to look, for example, if you look at the top line, because that's probably the first thing that you look at, the top line of the company, whatever figure it is, you see whether it has been growing over the years, because obviously we invest in a company for growth. So you need to compare. So one aspect of analyzing is to compare with the previous years to say, is revenue growing? And then you also look at the cost of the business. Are they growing at a faster pace than the revenue, or revenue is growing at a faster pace than the costs of doing business? And then you also need to look at the profit margins to say, if the company, in terms of its margins, are they growing? from wherever they were 5 years ago. And you also need to consider now to compare, because also analyzing, you also need to compare to say, okay, this is a company in the banking sector. This is the profit margin it is making. It's making about 5%. That's what you get to the bottom line. Is that 5%? How comparable is it with other banks? If my bank is making 5% and other banks are making 10%, it means my bank is not performing. So that can help you in decision making. Not only local banks, you also need to consider with to look at to compare with the banks in the region. Zimbabwe, we normally compare with Kenya and Nigeria to say the companies in Kenya, this is what the breweries in Kenya are doing, and this is what Delta is doing here in Zimbabwe. In terms of growth, these companies are growing outside Zimbabwe, are growing at a 20% rate or whatever, but in Zimbabwe they are growing at 30%. Then you can probably say Zimbabwe are doing much better. You look at their margins as well, and then there are also the easier ones though, or the quick ones that are easier, is to issues of what we call price earnings ratios, the ratios, what we call relative evaluations, where you are now looking at the price earnings ratio, for example, where you are saying to the price of the company divided by the earnings that it makes. And then you come up with a let's say, what we call 10 times. Let's say it's 10 times. Then you compare with other companies of similar nature to say, what are their price earnings ratios? If they are more than your company, probably you can see that there is headroom for your company to grow. Then you can decide to invest. There's the price to book, where you're comparing the net asset value and as a percentage of the price. So it's your price to book value. You do that valuation as well, and you compare. So it's always there. You're always comparing with other firms to see whether your company is doing better than other firms, and or to see whether it is not doing as much as other firms. So in brief, that's what I can say. But probably in future we'll arrange such meetings to talk about issues of analyzing companies. Thank you.
Thank you very much. Thank you so much.
Thank you very much, Kuzi. Yes, and indeed, I think we will need another webinar just solely on how you can analyze a company. Let me just quickly rush to some of the questions that were asked. Is short selling legal on Zimbabwe Stock Exchange? No, short selling is not allowed. Someone had also asked if you're going to have an online platform on Victoria Falls Stock Exchange. Yes, we are working on actually a platform which we will hope will be able to launch very soon. Then we'll be able to actually update the market on that. Someone has asked, how long does it take for someone to get a CSD account on ZSE Direct? So as Kuzi was explaining, he highlighted the importance of the KYC details. So it is important that when you do register, you complete all the fields and you upload your KYC details because the broker will then need to authenticate the KYC details and then allocate you a CSD number. So usually that process takes between 42 to 72 hours. And we do acknowledge that during the lockdown, it was taking longer than that. But now that the lockdown has been eased, it should take 48 to 72 hours. But in the event that it has taken longer, the ZSE is there to actually assist you. So you can always engage us if it has taken longer than that. Kuzi, I think as we conclude, are you able to share your details for those that would then want to engage with you after this meeting or in future?
Thank you, Tapua. Yes, I'm on social media at Kuzi_Sharara. That's KUDZIE_Sharara. On Twitter, you can get hold of me on Twitter, and probably we can share the links, some of the links that we have got WhatsApp groups that we have. We have got more than, at the moment, I think we have got about 12 WhatsApp groups where it's now a community of investors. Some of them I don't even share anything there. They are now sharing on themselves, and it's a community. They help each other in buying and selling of shares, giving each other some tips. So it's a platform that you can also want to join if you're not there already. And if you get hold of me on Twitter at Kuzi_Sharara, we can share such notes. And just Tapio was also something you were highlighting in terms of KYC. some of the delays that we see, you find someone who sent their passport size photo wearing a mask. You're only delaying the process because there's no way you can take that as when someone is wearing a mask. So yeah, those are my details. Tapiwa, if anyone wants to get hold of me, I'm on Twitter. That's the easiest. That's KUDZIE_Sharara.
Okay, that's fine. Thank you very much, Kudzi, for an informative session. And I would also like to take time to appreciate everyone that has actually stayed on. We apologize that the webinar is overrun by 11 minutes, but I'm sure it was quite useful. And as Kudzi highlighted, he's also available on Twitter. And I've also just shared our email for ZSE Direct. If you have any inquiries or queries that you'd want addressed, we are there to assist you. The email is zse.direct@zse.co.zw. We will be able to share the webinar, the link of the webinar after the meeting, but just kindly for those, some of the names are written guests. So if your name is not in full, please just kindly input your email address so that I'll be able to send to you, because I won't then be able to get your name based on the registration that you did. So if you can just kindly input your full email address, if you just have a name only, or if your name was appearing as guest, that would definitely appreciate. I would definitely appreciate that, so that I'll be able to share the link. Because there's also put in the details for his chat group, so you can also follow that link to join his WhatsApp group. So once again, thank you very much. We will be communicating on the future webinars that we'll be having, since we now have your email addresses, and then you'll be free to then participate in the upcoming webinars. Once again, thank you, Kudzi, and I wish everyone a good day.
Thank you, Tapiwa.
For the statement and about.